Thanks for joining us here at Finovate Spring 2018. I'm David Penn, Research Analyst for the Finovate Group, and joining me this morning is John Wapsch. He's the Chief Innovation Officer for Kasasa. So thanks first for joining us.
Thank you.
Yeah. Before we even get into the conversation I wanted to talk about, I wanted to congratulate you on yesterday. Kasasa won Best of Show. One of the companies won Best of Show for the Kasasa loan. A great comeback. You were here very early in Finovate's tenure. You come back, second demonstration yesterday, and knock it out of the park. Way to go.
Thank you very much. We're super excited. It's a loan that consumers really need and want, and I personally couldn't be more incredibly proud of the team and all the hard work that they put into it. See the industry recognition is wonderful, and we're excited to see the consumers essentially being able to have more control over all of their borrowing. It's wonderful.
Yeah, it was really something else. It's really nice when we're at these events and you can really sort of feel the ripple through the crowd of getting it. Of course, why not? And for that to happen with only the second demo of the day really kind of had me feeling really, really good about the day. That was going to be a really great event. And thanks for contributing to it. It was really nice.
Thank you. It's an honor.
So let's get in a little bit of what you're going to be doing in addition to the work that you did yesterday with the demos. You're going to be part of a C-suite officers debate talking about the role of the branch in sort of the digital world. Can you maybe give us a little preview of some of your thoughts on that, sort of generally speaking, about where the branch stands?
Sure. You know, the branch has had, it depends on which article you want to read over the last 5 years or so. You know, all branches are going away, or if you look at the actual data here in America, the branches haven't dissipated very much. You've seen large number of closures, but the more quieter story has been a lot of openings.
Yes.
And whenever you put that in contrast to the fact that traditionally most openings have happened when we've been spinning out new charters for institutions, and of course we haven't had very many over the last few years, it actually looks pretty even from branch number standpoint. What you're seeing is, of course, how people are using the branches, how institutions are reformatting their branches, where the branch footprint should be, size of the branches. But the overall need for the branch, studies confirm, just saw a new study released today, that again confirms consumers, including millennials, are saying, hey, I still occasionally really want to go in and talk to somebody. So what I think most institutions are struggling with right now is we know the future, it probably looks a lot more like embedded banking, things that Brett King has been talking about for years, right? And you see aspects of it with companies like Affirm, where you're in your shopping cart and the loan just kind of gets pushed to you. You're not necessarily going to an institution or to bricks and mortar to get that loan. And that's, while that's clearly a future, a lot of institutions right now I think are struggling with. Today, though, over 50% of my accounts, 50% of my loans are certainly still coming in through this bricks and mortar establishment. So I think today, what we'll talk about today and what, we've got several people on the panel from Challenger Bank all the way through to traditional bank. Wow. So it's going to be a really, hopefully a very lively discussion, but it's funny. It's almost like nobody's right now.
Right.
You can say, well, branches are really where we are. Yeah, we're generating a lot of business through branches today, but it's like re-articulating those branches and placing your bets towards a future that is more branchless, that is more embedded banking is probably the right approach.
Sure, that makes a lot of sense. It's really interesting hearing you talk about the fact that you got this charters lower, branches still going up. One of the great things about your book Bankruption that I was reading on the way down was it really did break apart some of those myths. Like you said, if you hear, matter of fact, in a presentation not too long ago, one presenter said, there goes the branches, another one says, here comes the branches. Yeah. And one of the things I really appreciate about your book is the amount of data that showed, here's what's actually happening and why you can have two people making both those arguments at the same time. They're not wrong, but it's not the full picture, perhaps.
That's exactly right. Yeah, thank you for that. When you dig into the actual data, obviously you can see both sides of the story. And what it fundamentally comes down to with institutions today, particularly United States-based institutions, is who do you want to be when you grow up? And I don't mean that as an insult. It's like right now we're at a serious inflection point, and consumers have already signaled that they want to change in the way that banking works, and the expectations that they have for banking. So it's up to the institutions or the technology companies to listen to those consumers and deliver what they want when they want, not necessarily where we've always done it. And that's a hard reality, I think, for some people to face. But banks in the United States have gone through several areas of immense change.
Yeah.
This is not new. I was talking to a fellow the other day. His family has owned a big chunk of this bank for over 150 years here in America, and he said, we're not worried about this technology shift because we've been through so many other foundational shifts over the 150 years that this is just another new fun challenge. And I think as long as any C-level, the organization from the board to the C-suite, really embraces that sense of change and that excitement, and then ripples it through the organization, making these tough decisions will actually be kind of interesting and exciting.
Yeah, that's very interesting, and we're running a little bit short on time, but there's one thing I wanted to touch on based on what you just said, and it also comes from the book. It was that idea of how community banks, credit unions can sort of better prepare themselves for new products and new change. You sort of had I don't call it a 3-point plan kind of thing, but you did have sort of a couple of things that they wanted to check off to make sure, to make it easier for them to do that.
Yeah, I mean, it's funny, a lot of institutions struggle with this idea that, we can't necessarily test out new technologies or new ideas or new products because consumers will get scared or feel fearful that we're messing with their money. But really great examples are when you look at the challenger banks over in the UK. Many of them didn't really have a choice. So they they're starting with new technologies and they're trying to get customers to believe in them. And so what they did is they really spoke with very clear sense of direction. Hey, you know what? If you want to put some money in here, know that you're part of an experiment. So first of all, just kind of telling you up front, this may or may not work. So don't put all your savings in here, but let's test it out.
Right.
And so they're opting into an experiment, and you're being very vocal with them. And that way, the people who are not into the experiment won't be part of it, right? And then as you kind of progress through getting them into your technology and playing around with your technology, you obviously want their feedback, and you need to be constantly open with them. So when there are failure points in downtime or what have you, being super open and transparent with your communication is the key to success. We saw with Monzo, saw with Tandem. These guys across the sea overseas have done amazing job, really kind of building more trust, almost deeper trust with their customer base than a lot of banks have over here in the States, just through a beta process, right? Because it's an open beta process that's clear transparency, and it's something that every bank or credit union here in the United States can model. So there's no reason to be fearful of trying new things. Just be open about the risks.
Right, excellent. Yeah, I really wanted to make sure that we got that in, because I thought that was one of the other points in the book that was really interesting, and really sort of an optimistic tone coming into this sort of conference where banks are being presented with a whole lot of new technologies, and it's like, that looks cool, but I don't know if we want to go down that route. And for somebody to sort of provide some insight about how that can be accomplished, I think is really, really nice.
Thank you.
Absolutely great. Well, thank you very much for joining us on our conversation. Thank you for joining us here at Finovate Spring 2018. We'll see you next time.